So if you remember from the dome here, let me go back to the dome here. 1 second. Here. If I go to the dome, what I want to do is first have a long at 25.7150. So 25 ATO long, 25.68 quarter, I'm sorry, right here.
Order pending.
And the 25.7150 is here.
Order pending.
So this is exactly, let me just expand this out, how we're approaching this ATO signal. So let me see if you understand. This is the first signal to go long here. You have this as an opportunity, and you have this as an opportunity. I don't know which will occur first, obviously, but whatever signal gets filled first, I have to cancel the other. So if this gets filled, I cancel the chase the trade. If this gets filled, I cancel the original ATO. And that's what you're seeing here. And I added the um, chart trader, not because I'm using and placing trades from the chart itself. I'm just showing you the placement. You see, if I come here to chart trader hidden, I'm sorry, chart trader off, like this. Uh, you see, you don't see the equivalent placement of your orders on the chart. So I like to add because then you can visually see not just on the dome, but you could see here the same exact orders occurring on the chart. So this is exactly the same as the dome here. And by the way, what I would recommend is doing something like this. So it coincides. So the dome is on your right and the chart is on your left, but it's exactly what you're seeing here is the equivalent. You're seeing on the chart the prices, where the market's trading, and it's the same as what's happening here. Sometimes that, it's up to you. You have to find your own way, how you like to view it and see it. But for a long time, I like to have the chart and the dome coincide next to each other like that.
Yeah, I am more comfortable based on what I have done so far.
hmm
More comfortable chart, looking at the chart and price on that one,
hmm
so I can see stuff.
So do you see here the pullback trade here that just occurred? You see
Yes.
the two consecutive candles and the first green candle? Remember, what's the last thing you have to do before you jump in long? Here is the entry. Here is the risk. 3 ticks is the pivot stop, or the pivot, plus 2 ticks. This would be the pivotal stop. So do you see here's the lowest low, minus 2 ticks. So the risk to take this long is very small. You see from here to here, a point or point and a quarter. So for me, this is a better trade. So let me show you. I'm going to go long here.
Order filled.
It's a 4 tick, 1, 2, 3, 4. I don't have to use that large of a stop. That's the pivotal stop here. Or let me see here, 1, 2, right there is the pivotal stop. I can cancel this ATO chase the trade.
Order canceled.
And so what I'm doing is the pullback trade.
Yeah.
Okay. So I entered here, and maybe a tick better. So I got a better price because if I would have entered, I would have entered at 25.6975. But my risk and my stop is so small that the trade is worth taking that trade. Instead of the strength trade here, where if I enter and the trade is a failure, you see the distance for the pivotal stop. It's a disadvantage. So you pick and choose the trades that make the most amount of sense. Yes?
Yeah.
Okay. Very good. Now, again, remember, before you take the trade, anything stopping me, anything conflicting, do I have a problem? All those same ideas that you're looking at that what before you take the trade, is there anything that will create a problem? And so when this pullback trade occurs, there's not anything here. indicating to sell, everything is indicating to buy. Atlas line is above the Atlas line because that's a pullback trade. The ATO is also trying to provide you an opportunity long. If you're using something to help you, you rather have everything in the bias to the long side, not one thing short, one thing long, one thing confusing, one thing doji, right? You don't want that. Okay, very good. Pattern and entry has to be higher than the previous, but obviously the first one has to relate to something. It's relating to the original Atlas line signal that started the move.
Target filled.
Okay, so let me know if you understand what happened here with this pullback trade. So you see the entry long. I had the pivotal stop, hit the target, and you're finished.
Yeah.
Done. So I would rather you focus on the signals that have less risk, like the one here, as opposed to this here. All right. Let me see here. So I still believe that to go long, 25.7150 would be the next opportunity because the ATO hasn't occurred yet, right?
Order
The
pending.
pullback trade occurred between or within the ATO. So this is still a possibility, right? 25.68 quarter.
Yeah.
So I took it off the chart because mistake, 25.68 quarter.
Order
I
pending.
took it off the chart so we wouldn't confuse based on the pullback. But because the pullback hasn't hit yet, or I'm sorry, not the pullback, the ATO trade, which is now retracing, hasn't occurred yet, I can put it back on the dome. And now I'm going to focus on getting filled on this signal or this situation, whether it be here or here. But if during any of these signals, the strength trade, the pullback, or even the original Atlas line, if the ATO signal has already happened, then I'm not interested in it anymore, right? So the only reason why I added back the ATO um, entries is because it hasn't occurred yet. The signal for the pullback occurred in between.
Yeah.
Okay, very good. Because
So
there's no reason for me to take the ATO a second time or third time. If it already happened, I'm done with it. But since it hasn't yet got filled or hasn't occurred, then it's still an opportunity. I don't want to make a point in every trade. I want to make 2 points or 2.5 points, which is normal. But if you see the volatility at 5 or 6 points, don't automatically think this is great because I can now make 5 or 6 points on each trade. It's true, but you can also lose the equivalent very, very fast, and that's a bad thing. So it has to be, somewhere in the middle, not too slow where the market is dead at 2 or 3 ticks like we've seen the last couple of months, and it can't be something chaotic where the ATR is at 6 or 7 because you have to think about it. Every candle is moving forward in the immediate future is the equivalent of 3 points, or is the equivalent of 2.5, or is the equivalent of 1.5. So the problem is with the ATR being so high, the candle into the future could be equally as large. And in order to maintain a, or stay in the trade, you have to have a stop that's larger than the ATR, right? So that's why the catastrophic stop is intended to keep you in the trade, but also relative to the conditions. But as soon as it reaches above 5 points or 4.5, in order for me to stay in the trade without it moving up and down and up and down during the time-based stop or waiting for the prove it stop, I can get stopped out very easily because the range the candles expand are very large, and that's a very large loss. So that's why when you see the ATR starting to become a little bit chaotic and very strong, it's best to stop, wait for it to get back to normal, especially if it's a news event or something, and then you can then within reason take risks and take a position that's not going to hurt you. Do you understand that? Yeah. Okay.
Order filled.
Yes. Yes.
us,
Yes. I think I can help answer your question, but I want to just show you the ATO chase the trade was filled here, so you have to cancel the original at the
Order
open.
canceled.
Okay. So are you okay with that?
Yeah.
Okay. So to answer your question, if there's something that I could do to show you the good, the bad, the ugly, because remember, it's not just about winning trades because they're going to come. It's
Target
also about
filled.
how you protect yourself under bad situations with losing trades. That we also have to understand how that works. It's not just all the